Hey investors, welcome back to Vishal Vealth View. Q3 results for some of these companies are out, and in today's episode, we are going to take a look at Q3 results for HDFC Bank, Anant Raj, and Sunteck Realty. In this episode, try to understand how this business operate, and do not consider this video as a investment advice in any of these stocks that I'm talking about. So, without wasting much time, let's start this video. Starting with HDFC Bank, for this quarter, deposits are up almost 16%, which is a positive news. AUMs, which is asset under management, are up by 7.6%. The asset quality remains stable, which is one of the primary reason why you would like to invest in a stable company or a big bank like HDFC Bank, because the asset quality of these bank or the loan book of these bank are pretty high quality, because the loans are usually given to customers who have high chance of repaying them, and they have a good credit ranking and low chances of defaulting. So asset quality usually remain high in big banks like HDFC or ICICI. Small bank usually are open to giving riskier loans to folks who might have a chance of defaulting. That's why they might do something creative called as group loans. Ujjivan Small Finance Bank has done that, in which they give out a particular loan to a group of 6 or 7 individual, and all of them are responsible for paying it. And that's how they are also able to reduce their like net NPA in a better way than these big banks. But that's a general trend that you observe, that big banks, HDFC, ICICI, have a really good non-performing asset because the customers have a low chance of defaulting. So this is a really good news that the deposits are growing in HDFC Bank, because if the deposits grow, they are able to give out more loans. And this might be a trend that's coming in as the interest rate are high for almost past 1 year and last 1.5 year. So this is a trend that's likely to continue. Let's see. So if we see with respect to the previous quarter, the earning per share actually decreased. So there's still not a stable trend that earning per share for HDFC Bank is going to increase on a consistent basis. If we see the EPS for how is it trending for past few years, there's a clear trend of EPS expansion during the year 2015 till 2020, which is has been lacking since almost June 2023, because of the merger that happened between HDFC and HDFC Bank, which was only focusing on the housing finance, and now both our entity are merged, and that's why there's some amount of time that this bank needs for recalibration and making sure its operation is running smoothly again. And this is the reason why the stock price has been beating up for past 3 4 years. So I don't know what's going to happen next, but seems like the trend has still not reversed for HDFC Bank for EPS expansion. So let's talk about sales and profit growth for this particular company. So you see a huge spike in the sales or revenue growth for this company during March 2023-2024 period. It's mainly because of the merger operation that happened. However, the EPS expansion is still yet to happen. If you see from March 2023 to 2024, in last 2 years, the EPS has not expanded by a huge margin. And this year, we are observing some amount of EPS expansion to almost 91, which is around 8 or 9%. So moving forward, as the company becomes more stable and the operations become more resilient, we can expect this bank to grow at a pace of the growth of GDP plus inflation, because this is the biggest bank and it's not expected to grow at a rate of an exponential rate of more than 20% or 25%. So this is the return expectation that you should be having. However, this is really positioned well from a valuation point of view, because it's trading at almost its historical lowest valuation. This was the valuation of this bank around COVID times, and it might be a good time to build an entry, but again, you might have to do your own research if you want to invest in this stock. So I've already built position in this company, but my position has been built almost 1.5 year ago, and as of now, I'm not planning to add a huge amount of position in it. I might add around 50,000 to 60,000 in this particular equity whenever I see the time is right and I have the money. But this is a stock that I'm planning to hold for a really long time. Next, we have Q3 results for Anant Raj. In this quarter, Anant Raj sales expanded with respect to September quarter by almost 8 to 9%. And if we see year on year, almost 81% is the CAGR at which they are able to grow their sales. And clearly, this company in its expansion phase, they are experimenting with new ideas, which is the data center business. And they have a traditional real estate business that's fueling that's bringing the cash flow for the data center business. One good thing about this company is the debt to equity ratio. Now, real estate company usually have a business model where they go out, take a huge amount of debt, buy a piece of land and develop a real estate and sell it to the customers. However, they somehow are able to pay up all of the real estate they own. And now the company is in a position where they own the real estate and they are thinking about building data centers or either housing projects or luxury sorry, commercial projects or either luxury housing projects. So let's take a deep dive into the PPT for the investors. So with respect to Q3 24, we see almost 143 crore jump in revenue, which is a good amount, and we almost see 44 crore jump in EBITDA. And about PAT, we are observing uh, around 39 crore. So these are good results. As you can see, in last 3 4 years, the PAT has been expanding by almost more than 100% CAGR. So they are able to double the profits and in every second year. But these are a result that's starting from a really low base, so you should not expect them to continue over a long period of time. Along with this, over time, they are also able to stabilize their debt, and the debt sits at almost 290 crore now, which is down by almost 81%. So that's not the reason why we are invested in this company, though, because this company is trading at a really expensive valuation of almost 50 to 60p, which I usually stay away. But here is a really good story that's at play, which is the data center story. And they have already operationalized 6 megawatt of IT load data center at Manesar, and they're planning an additional 15 megawatt at Manesar and 7 megawatt at Panchkula. And they're planning to expand this capacity to almost 22 megawatt. And all of this is, I think, co-location based facility right now. Along with that, they're also experimenting and venturing into their own cloud infrastructure in collaboration with Orange Business. So they have rolled out something called as a show cloud. Now, I don't know how good this Ashok Cloud is, what's the adoption, and how much folks might like it. But this is a value addition on top of the basic infrastructure that they're trying to provide. So it's still it will need some time before we can see the result and the revenue from this Ashok Cloud coming. Right now, I don't want to pay up too much for this specific innovation or this specific technology that they're trying to build. And let's see how things play out. So what are they planning in future? So this is a general plan that they are having for the coming years. So they have around 11 million square feet projects in sector 63A, which are planned for residential housing only. Then they're planning to expand 63A for expanding it from either commercial projects or land housing projects. Then they're also venturing into joint ventures with other companies and with other developers so that either they can get the land or they can collaborate with some other brand. And apart from that, there is almost 84 crore of 84 acre of land that is fully paid, and this company owns it. And the data center story still continues to uh, be at play here, and they're planning to expand this 22 megawatt capacity to almost 307 megawatt capacity by almost 2030. Now, this entire venture is risky. We have to see how it plays out. But this is the story that's coming out from Anant Raj as of now. So Q3 results for Sunteck are also out. If we see, there's no huge jump in sales. However, EPS did increase by almost 15 to 20%. If we see the profit loss statement, the TTM sales growth is almost 475% and profit growth is almost 445%. So clearly there is a cycle reversal that's happening in this company. If you see all in the entire year 2023, it was generating negative EPS and now it's coming to positive EPS. And for this year as well, the EPS has jumped to almost 13. So I'm expecting there's a reversal that can happen in this stock and trading it at its almost historical lowest valuation and historical highest earning per share. So let's see. Let's take a look at key highlights in the investor presentation for Suntech. So they're planning to add two more projects with gross development value of 2004 crore and total gross development value of Nippon Sea project, which is the primary location in which they're building, is 5,004 crore. Now the pre-sales is growing at 40%. Collections is strong at 336 crore. Revenue observed a growth of almost 281% from the last year. Same with EBITDA and same with PAT. So in terms of portfolio, they are adding two more projects in Nippon Sea Road, and this is the total portfolio which stands at around 40,000 crore right now, which they'll be materializing in the coming years. Apart from that, by 2027, 2028, they'll also have a capital value and real estate of around 5,000 crore, which will be generating a annual rental income of 320 crore. Now, this is entirely profit. They might have to pay some tax on it, but this 320 crore is entirely profit, and this is given on a long-term lease as per the CEO of the company. If we see the trends, clearly from Q3 24 to 25, there is a growth in pre-sales but drop in collections. That means more folks are coming in and buying new apartments. And if you take a look at the 9-month view, then also you observe a growth in pre-sales, how collections stand at a steady rate. And the reason might be right now, as per Suntech, MMR might be the most affordable market right now. And this affordability metrics, I don't know how they're computing because I think Mumbai is the most expensive real estate market in the country. But according to them, real estate prices per square feet in Mumbai has never been so low with respect to how much folks are earning. And this might be a good indication that there is a cycle reversal that can happen in some years. So it might be a good idea to keep an eye out for this. Another thing to note here is that this company is operating at a cash to surplus of almost 1,700 crore, which is, to be honest, amazing. That means they can reinvest this capital in buying more properties, acquiring more properties, and diversifying their rental portfolio. And this is what the company is planning to do. And that's why if you see the debt time over time is decreasing. And now they're at a stage where they have negligible debt. And this is really amazing for a real estate company. So that's it for today's video, guys. I hope you enjoyed this video. And if you like this video, do leave a like and subscribe to this channel. Bye bye. Happy investing.